Hey guys, Peter Harper, Managing Director and CEO of the Ascendant Family Office. So today we're going to talk about family office investment management and principally how it can be different or is different from traditional wealth management. I'm going to start today by stepping through, as a kind of a recap. Previously you've heard me talk about the basics of the family office. What does a family office do? What is one? What does it do? Difference between a multifamily office and single family office, and then we'll step back into some of the deeper issues around the core differences of family office investment management when compared to traditional wealth management, and why they're different and why they're so important. So basics. So what does a family office do? Really, a family office is a tool for high net worth families and ultra high net worth families that are looking for a solution to support all aspects of their family. So across wealth management, tax, accounting, legal, asset management in the context of personal assets, so houses, cars, planes, boats, and asset management as far as wealth, financial asset management, so wealth management, right? The major difference, right, and I've been asked this before, okay, what is a family office really anyway, and why isn't it just different from a traditional relationship? In a traditional relationship where you're dealing with a patriarch or a matriarch, a single person that's made money, and you're supporting them and their family, really all you're concerned about is the attitudes and the needs of the principal, right? Everything else is as an advisor, everything else is relevant. Major distinction in a family office is when it's multi-gen, or it's being set up to be multi-gen, is that you do care about the input and the thoughts of every family member. Well, not every family member, but the key decision makers. And you're doing that in light of the fact that you want to build legacy, right? You want the family office or the family wealth to be around in multiple generations. You don't want the money to be wasted. So that's the core reason that most people set up a family office. How much money do you need to start a family office? This is a question that we get a lot. It ranges a great deal, but the key focal point that we always think is, okay, based on what you think you want to set up as far as family office structure and the complexity of the asset base that you've got to manage and the people, the number of family members that this thing's got to support, really the core focus should be around the infrastructure costs. Who are the people you need to run this successfully and sustain the family needs? And can you do that with the capital base that you have, right? So it's less about particularly how much money do you need. It's more about, can the asset base support the needs of the family? Another issue is when thinking about family offices, when you are looking at this and saying, hey, this is a legacy item, this is something that we want to sustain for multiple generations, not 20, 30 years, but 100, 200 years, you really do need a very strong governing board, right? You're bringing the same sort of governance items that you would bring to bear in a successful business to within the family office. So what does that look like? You're going to have, you're going to have an official board. Family members may be involved in that, but there should be some level of independence, right? There should be fiduciaries in place that are helping the family execute on the strategy and vision of the family, right? So it's ensuring, hey, listen, we've determined that we want to set up a family office. We have a vision that's focused around the future legacy of the family, and we are going to keep family members on track and accountable to those, right? And that sort of comes into goals and complexity of the family office, right? Again, depending on the size of the capital, the number of folks who are involved, and the objectives, like how long you want the family office to stick around for and how you want it to succeed. That's really where the complexity sits within the family office infrastructure. And then, the sort of final point around the basics is there's just many disciplines. When people think about, a family office, a lot of the times they focus on the wealth aspects of the finance aspects of the family, right? Yes, those aspects are very important to the continued longevity of the family, but it's often the non-financial aspects or the non-money generating, so either the philanthropic and the support functions, they impact every part of the family, right? And without them, the family would not stick together, right? So when you're thinking about the family office, it shouldn't just be, hey, listen, yes, wealth management, money management, that's the thing that right? It's the core that starts the family office, that sets up the family office, but it's not the only, it's not necessarily the single most critical aspect. Okay, so we got the basics down. Know what a family office, we understand the services that are involved, we understand the capital needs of a family, we understand what a family office is, right? To recap, a single family office is a family office where one family says that they want to invest in the infrastructure solely to support their needs and their investment objectives. A multi-family office is when a family says, we don't want to have all this stuff in-house, we want it on a fractional basis, so they engage a business like a senior family office to support them in that respect. I'm often asked about what's given to the recent rise of family offices, right? It feels like it's a relatively new thing. It's not a new thing. I mean, family offices have been around in some shape or form for extremely long time. But the most recent rise, I think, definitely in North America, can be largely attributed to a bunch of changes that happened post the financial crisis, where folks understood that due to changing in banking laws and regulations, maybe it was better for more of the wealth decisions to be made outside of large financial institutions and internally within a family, right? Also, a lot of families, because the growth options available within post the financial crisis were not really there in traditional markets. They had to look to alternatives, so private market opportunities were to get the same returns. A lot more capital started to flow into private equity and private market opportunities. I've got a point here on the process of interfacing with family offices. I think it's really important for any advisor or any person, whether that's external, is to really understand the needs and objectives of the family. I know this goes to say with any client, but when family infrastructure has been set up to serve the goals and objectives of the family, whether they be philanthropic, general support, or capital growth, it's really important that advisors understand that, right? A lot of the times, these folks are thinking about this with a very long-term perspective, right? And so your traditional attitudes around that may not always be helpful. And this goes back to the next point where I've made a note here around the challenges of dealing with family offices. And the ones that I've always seen, family offices that have been the most successful has been it's all been around organisation, right? So proper operational organisation efficiency.